All right. Good morning, folks. Happy Monday. Glad you could join us. Um, Before we went live, we were talking about awesome SCTV and Bob and Doug McKenzie. I hope some of you know what I'm talking about. I really do, because that will make me happy. One of the best shows ever. So with that, let's get started, everybody. Let's jump in. Glad you all could be with us on a Monday morning. This show is going to be fun. The pre-show has already been fun. Welcome to the 51st episode of FinTech Insider, the Breakfast Show US. I'm Sam All, 11FS Managing Director North America. I'll be your host for the show. If you haven't read our latest research report yet, I got to go ahead and get this out the door. The post will be out here. Bianca will make sure it's out there. It's really fantastic. It's all about the needs of SMB owners in the U.S. and how financial institutions can make propositions to better serve them. Head over to bit.ly/DIGITASMB or click the link in the post. And also our research report we did with Plaid. Yes, the Plaid that was acquired by Visa, about how open finance will shape the industry. That's at bit.ly/openfinance2020. And again, we'll have the links out there. Folks, as you join us, please let us know where you're at in the world. All right, go ahead and throw it in the comment sections. We'll try to give you a shout out. And please click that share button. So if you look down in the lower corner, you see a little share button. Click on that thing, post it out there. It really helps people find the show and grow our audience, which we'd appreciate. All right, first off, 3 news stories from the past 24 hours that got my attention, and they should have yours. The first one, our good friend Ron Shevlin, he had a great article in Forbes online today titled Amazon and Goldman Sachs, a small business lending wake-up call for banks. Ron notes Amazon and Goldman Sachs announced a partnership to provide lines of credit up to $1 million to merchants selling on the Amazon platform. According to CNBC, the application process is fully digital. It can be done in minutes, and most customers will get approval results in real time. The credit lines will come with an annual interest rate of 6.99% up to 20.99%. If users don't make minimum payments on time, they will owe late fees and a maintenance fee if they don't use at least 30% of their credit line. If sellers consent to it, Goldman will use data on business revenue and tenure on Amazon to determine who should be approved. There are two clear benefits for Amazon from this deal, according to Ron. Amazon adds a new source of revenue with the fees from the market's credit lines, and 2, Amazon sellers get needed capital to continue selling on the platform. Ron basically notes this is a great deal for both Goldman Sachs and Amazon. If I'm a smaller bank or community bank, I think I'd be a little bit worried. TechCrunch reports a story today. After months of talks and trials, WhatsApp has finally pulled the trigger on payments in its app for Brazil. Today, the Facebook-owned messaging service announced that users in Brazil will be the first to be able to send and receive money by way of its messaging app using Facebook Pay, the payment service WhatsApp owner Facebook launched last year. WhatsApp says in its blog post that its payment service, which currently is free for consumers to use, that is, no commission fee taken, but businesses pay a processing fee to receive payments. They'll work by way of a 6-digit PIN or fingerprint to complete the transactions. You use it by linking your WhatsApp account to your Visa or MasterCard or debit card with initial partners including Banco do Brasil, Nubank, and Sicredi. Those are all huge players, by the way, in Brazil. If you didn't know, Nubank, the biggest challenger bank in the world, in my opinion, I think over 25 million customers in the Brazilian market. And finally, circling back to Forbes, they report fintech startup Synapse is laying off 63 people, which is nearly 50% of its full-time staff. This is according to a former employee. The San Francisco company makes digital banking software for other fintechs, letting them quickly launch features like mobile banking and savings accounts. It counts fast-growing digital bank Dave and investor company Yield Street among its customers. But even before COVID, Synapse has had a growing number of problems. In late 2019, it was sued by 3 former employees for gender and age discrimination back in April 2020. All right, with that, let's get our guests on, and we're going to basically talk, like I said, about SCTV and Canadian television, and we'll talk a little bit about their companies. We're super excited to be joined by Darby, Sieben, and Derek Szeto. On today's show, the duo is going to talk us through what digital transformation means for core banking strategies, as well as the industry, how it has to adapt rapidly in the past few months. Hello, Darby. Hello, Derek. How are you guys?
Hey, good morning, Sam. How are you?
I'm really good.
Good.
Both of you are in Toronto, correct?
We are, yes. A nice sunny day out.
Oh, good. That is a big.
Yeah,
I should go to the lake, man. I love Toronto. Toronto is in the U.S. an underappreciated city, in my opinion. Great food, great clubs, And like I said, you got the lake, so windy.
Absolutely.
But other than that, it's not great. All right, so Darby, if you don't mind, can you talk a little bit about Amply, what it is you guys actually do there?
Yeah, absolutely. Thanks, Sam. So Amply, very, very simply, I mean, we are an engagement platform, and it's a double-sided marketplace. So your typical double-sided marketplace problem. On the user side is really simple. It's a cashback app. You come in, you link your credit card or any of your payment cards, and then we do a watch and match technology, and we issue you cashback. And on the merchant side, it's really a marketing platform that allows you to, merchants to reach new customers. And we kind of bucketize that by, what do you do for people that have never shopped at your location, sometimes shop at your location, and always shop at your location? And how do we build the right mechanisms in order to cater to those three types of users? So in a nutshell, that's what Amply is.
All right, and Derek, what about Butter? Great name, by the way. Smooth like butter. I love that.
Yeah, sure. Oh, thank you. Exactly. We're trying to keep it smooth, and really the whole theme is around subscriptions. So we think that makes a lot of sense. How do we help people organize, manage subscriptions, get more value out of the subscriptions they have? So we do things like being able to let you link your credit cards, debit cards, bank accounts, and then automatically build a list of the subscriptions you have. We help you discover new subscriptions you didn't necessarily know you exist. And then at the end, we help other people and merchants as well help them get the word out about things that our kid, and we worked with Instacart, for instance. When they first came to Canada, they have an Instacart Express offering, and we think this world of subscription is basically crossing all boundaries, whether that be hardware, software subscriptions like Peloton, retail programs like Amazon Prime, and then of course the classic Spotify, Netflix of the world.
And the thing that I find interesting, and people are probably wondering, that's cool. So why do we have two companies on today? And we'll get there. One, I want to go ahead and say this. I don't know what happened today, but we got people from Cyprus, Argentina, Nigeria, Hungary, London. Darby and Derek, evidently, you guys are incredibly popular across the globe. So well done. I mean, that's a great crowd that's on today. It's all Derek. Let's just go ahead.
We might get invited back. Who knows? I don't know. That's why you get.
I don't know anyone from Cyprus. So.
Damn it. Well, you do now. Because
we'll take what we get.
So let's go there. What is the hook? Why would we be bringing both Amply and Butter on at the same time? What's the connect there, guys?
Yeah, do you want to take that one, Derek?
Yeah, sure. So, we are both actually ventures under RBC Ventures, which is part of RBC, Royal Bank of Canada, Canada's largest bank. I joined a bit over 2.5 years ago when they were, built a program early stages, trying to add a bit more entrepreneurial expertise, because the whole idea of ventures is to try to go a bit beyond traditional banking. So unlike a lot of the other ventures that you see out there that like spin up, the products and services that we typically run with are going to be higher up in the funnel, meaning that they're not traditional core banking financial type services. And the second thing that's important is that they're open really to all Canadians. So we're not just trying to address people that are RBC customers. We're trying to provide valuable products and services to Canadians at large, and then we'll figure out opportunities where it makes sense to introduce them to RBC, of course. But first and foremost, we want to provide consumer value, and we do think that's a bit unique in the market in terms of the ability, progressive, forward thinking, and really invest in these products and services.
Yeah, maybe just to add to that, Sam, I think what RBC has done by creating a ventures model is they really kind of brought three groups of individuals together. There's what I would call a lot of the core financial group, people that really understand the banking industry and are looking at how do we move beyond banking, as Derek mentioned. Then there's a lot of our ventures, which are homegrown, and we have a lot of very young, passionate, talented individuals that are early on in their careers that have, amazing ideas and are ready to kind of push things forward. And then what also Ventures has done is it's kind of reached out to people like Derek and myself and a few of us that have, founded companies in the past, have sold organizations, are kind of true digital natives, not really in the banking sector, but have built businesses within the traditional side. When you combine all three of those together, bank strategy, really talented individual, and surround that with people that have, kind of done that before, really amazing things start to happen. So I think it's a really a unique model that RBC has put together.
Yeah, and I think it deserves a shout out there. A lot of banks have started venture funds. I mean, City Ventures has been around, forever and a day, but we're seeing this definitely pick up in financial services globally. So it's one thing to start it; it's another to actually execute. And when I say execute, come up with some really good ideas that can grow into a business. That's when it's one thing to come up with a PowerPoint deck or something on Keynote or some basic wireframes. It's another to actually have real customers. So, it's a credit to both you, Darby, and Derek, and your teams for what you're able to do. Can you talk a little bit about the Canadian consumer market, if you don't mind, and the merchant side of this too, Darby? Because I'm curious. In the U.S., typically what we say is compared to, say, Europe or Asia, the U.S. consumer is a little bit slower when it came to digital adoption. I think that's definitely changed over the past year or two. And especially with COVID. So what is the Canadian consumer and merchant space like when it comes to digital?
Yeah, it's a great question. I mean, on the consumer side, sometimes Canada tends to lead. Social media is a really good example. Canadians were very, very fast forward in terms of adoption of Facebook, as an example, as a percentage compared to the U.S. counterparts. In other areas, we tend to lagger. So I would say, in Amply's case, as it relates to cashback, I think the U.S. market's a little more mature on this front. Yeah. I think the Canadian market is really starting to pick up steam. But in the sector around cashback specifically, we think there's a really interesting opportunity. COVID has definitely presented something, obviously, with what's happened in the travel industry. Right. And travel points. So I think more consumers are very open. And becoming more open to the notion of different types of cashback programs. Some are receipt-based, some are, you have to present a card at till. Other programs like Amply, which is more, connect your financial institute on the back end, and we'll do kind of a watch and match technology. On the merchant side, though, I think this is an interesting one. So I think consumers generally love all cashback type programs, and they will tend to use as many as they possibly can to try to figure out what's the best method to earn a little cash back on their everyday purchases. On the merchant side, though, it really is about optimization and finding those right channels that allow you to have the combination of cost effectiveness and scale. And so we think, and Amply is one product. We also have RBC Offers, which is on the core bank, which does an offer type platform as well. We think on the merchant side, it's about how do you build enough scale fast to become part of that consideration set that says, okay, we've got the right balance between scale, audience reach, and cost effectiveness, because merchants are struggling with, how much time they have available in order to manage all of the different marketing channels. So we are moving very, very hard to be, I always like to say, if there's 3 spots in the playoffs, we want to be one of the 3 spots in the playoffs. And we think in the cashback space, you have to be big very, very quickly if you're going to have long-term sustainability.
And I'm curious, when did you guys make the decision this was going to be cashback only? Because, there's a ton of different award points, reward point programs that are out there. We were talking about the Nectar card in the UK that I used to use all the time, right? When I lived over there. So one, I commend you on that. I think it's just simple. I think the simpler the solution, the better. But was that the concept from day one when you were putting Amply together?
It was, and actually Derek can speak to he was there even a little bit earlier as they were actually manifesting what this was
cool.
To look like.
Yep.
And yes, I mean at the simplest form, when you think of cashback today, that was where we wanted to come in. How do we make it as simple as possible to explain? But maybe Derek, you want to provide a little more color on why cashback was the key.
I think you're, generally seeing a movement like cashback. Even if you look at the credit cards, more consumers are starting to gravitate towards cards, for instance, that have cashback. Partly because of the simplicity, which you mentioned, Sam, and people can sort of do with it, what they like, and it's a bit more transparent. I think, people have been burned in certain cases by the companies adjusting, point values and so forth. So cash is cash, and you can spend it exactly like you would anywhere else. So I think that's a clear value proposition and something different than, some of the other players in the Canadian market. the air miles and aeroplanes, who've traditionally been sort of the leaders in the space. And I've worked with Darby a long time, and we're actually both very passionate about how do we make this thing work really for both sides of the equation, around matching consumers and matching merchants. But the value proposition has to fit for the consumer. The value proposition of cashback is just direct and clear, and we think we can sort of make a clear segue in that market. And Darby's obviously been doing a great job, and I think there's a lot more to come in the next little while.
So the concept of butter, I also love to no end. I mean, we live on our digital devices. I'm a consultant first and foremost. So normally I'm used to being on the road. Somewhere there was a stat on the number of folks that actually turn their television on in their hotel room, which is continues to completely just tank, by the way. Because everybody's doing streaming services, right? I'm going to watch something unless you're going to stream, you're going to hook up your phone to the television set, which why would you want to do that? No one's watching the TV. It just doesn't happen. So, it's just a sheer number of different subscriptions that you have. So that concept of butter for me, having the ability to clean out my phone and to clean out the subscriptions makes all the sense in the world to me. I would expect, especially under COVID, you saw some significant level of customers signing up.
Yeah, so it's really interesting. So the way that sort of COVID played itself out is that sort of a selection bias against the subscriptions people use. So things that people are using a lot more, streaming services, they're going to go and maybe sign up for more, do more free trials. MasterPass was very aggressive out there with a buy one get one offer. On the other side, there's gym memberships, for instance. Gym memberships, you can't physically go to a gym, so a lot of people are figuring out, hey, can I cancel? Do I pause? Are they charging me? And these are questions that we're trying to help people answer. I think net, and even relative to the US, like Canada's maybe a little bit behind in terms of the variety and availability of different types of subscriptions. But there's sort of no doubt, today, and if we fast forward 5 years from now, that there's just going to be more subscription services. And so how do we, again, to Darby's notion, how do we become really the first place people think about for subscriptions? And our view is it's sort of space, because people will say shopping and, hey, you go to Amazon, searches Google, but subscriptions right now, nothing comes top of mind. And for RBC and for butter, like, we're trying to play in a place that will matter, and subscriptions in the future is a nascent but very much growing matter much more to consumers. The same way now, it's basically inescapable from B2B. You can't run any sort of business without basically having a host of subscription services. So that's going to happen on the consumer side too.
So we already had a good question come in from Siddhar. He's a founder of a company out in San Francisco. He said, a friend of mine has received an offer of funding from an incubator at a large bank. So he's weighing the pros and cons of this. So the pros being money, possible customer name brand. The cons, the bank may shape his product to narrowly meet the bank's goals missing and what they're missing from the broader market. So culture too may get shaped by the big bank culture. So since you two have both are part of RBC and lived this, can you kind of speak to the pros and cons? What should founders consider when they're looking at, say, something like a venture fund, pure venture fund outside of a bank or working with a bank? And I can guess which side you're going to take, by the way. Just saying.
Do you want to jump in first, Derek? And then I'll add.
Everybody.
I'll start first. Maybe I'll start first. I think you have to know going in that it's not going to be like a pure, startup, and that's a reasonable expectation. And so in the end, there's pros and cons, right? I think one of my thoughts in joining RBC is that they have been a very progressive organization, and they've done a good job top-down support. So Mike Dobbins, who sort of leads the ventures group, is one of the general executives at RBC, basically one level down from the CEO, and the CEO is involved as well in terms of alignment and making sure this is part of the core strategy. So I think it's one, super important, and can only work if this is something that the CEO down believes in, and there's that level of support and arguably a little shield to be able to go and operate without having all the traditional core bank process. So that's probably the second thing is to the extent you can try to provide as much separation and room to run for these individual ventures. Isn't to say, hey, we're certainly spending more legal and compliance time on these ventures than we would in the standard external world, but you get the benefit of later stage, for instance, being able to go scale, I think, certainly a lot faster once you figure out, sort of the flywheel, the bank and the resources that they have and the brand awareness to really accelerate that flywheel and to really put their resources to work, is something that was attractive to me. And I think the hope is if I can do, Red Flag Deals, my first venture was 10 years from start to exit. If I can do a venture that has that type of scale, but do it in 5 years, that means I get to do 2 instead of 1. So for me, it's like, how do you try to accelerate that process?
Okay.
And I think to add to that, it's what Derek said, is whether it's a big bank kind of acquisition or whether it's looking for VC. Might be, do you have that right strategy in place? What is the executional kind of span of control that allows you to get what you need to do? How does that stack up to the current method that you're in? I mean, if it's capital injection that you need, then obviously a commercial partnership that's doing an investment might actually make a lot of sense.
Yeah.
And then kind of what's the egg of that? And I think as any founder of an organization, you've got to really weigh those, because there's pros and cons. I don't think there's an easy answer whether it's right or wrong. I think there's pros or cons, and if you're go in eyes wide open, you ask those questions, and I think it really starts to become very easy to say, okay, does it make sense to seek VC capital? Does it make sense to have a strategic investor? Does it make sense to try to do it on your own?
So the PR team at RBC, I'll just breathe a sigh of relief. You both answered that incredibly well. You tap danced on that line. But I mean, honestly, it's a good answer. I'll flat out tell you, Siddharth, in my opinion, a distinct advantage of working with a bank venture firm is access to data and access to compliance. Those are just, if you're doing anything in the financial services space, having folks that are subject matter experts when it comes to the regulatory environment, which changes nonstop, by the way. Yeah. That's their whole life and job. I always tell people that when they're starting a company that's focused in fintech, that one of your very first hires has to be a risk and compliance officer. Don't build a product and then hire them, because you just wasted time. and Darby and Derek know exactly what I'm talking about there. They'll go, "Oh, that is the coolest thing ever." You can't do that. So to get rid of that. Not that ever happens.
I think that is part of the opportunities. How do you find these crossover opportunities where ventures can sort of work with the bank to create net new things and sort of leverage the banking license that you can't sort of just come by as a standalone startup. So you create new, not necessarily just sort of push on your own.
Another good question. This one from Sunana in New York. Hey, Sunana at M Science. With so many free trials that run to subscriptions, it's hard to keep track of everything in place. She loves the concept of butter. Having a digital assistant there. Good question though. How are you planning to engage end consumers and ensure that users stick on using the service? Because I could see this as a one and done, right? I go out there, sign up for, use the service, go through and go, oh my God, look at all this junk I've had, and clean it out. How do you get them to re-engage and keep coming back?
Yeah, so the good news is subscriptions are recurring. So there's a clear model to try to get people to come back. And the way we think about that is we think there's sort of these on-ramps and off-ramps. So some of these on-ramps and off-ramps might be, we put it together in the dashboard. That's an on-ramp. Now you have it in one place. Second step might be to ask you, hey, we actually know which subscriptions you have. So we'll ask you, similar to Amazon does, to put in sort of verified reviews for subscriptions. So you and other people can discover subscriptions. And then you might, churn, and we could always ask you why. The other thing that we do is we try to deliver content that's relevant to the subscriptions you have. So that's our really, how do you get more value out of what you own and already use? So, how do you know what are the new games that are coming out for, Xbox Game Pass, or what are the classes for your Good Life membership? What are the movies coming on Netflix? How do we deliver that all in one place? So that's really, the direction we're going is, help you decide what you want to keep, know what you have, what you do have, try to get more value out of it by utilizing it further. And then we'll do other things that are, very common, like you guys have in the US, bill negotiation. We help people be able and negotiate a telecom bill, for instance. But that's everywhere in the US. That's fairly new to Canada and fairly new to Butter as one of the services we offer.
So a good question is a follow-up question on that. This is from Paul Loberman. Hey, Paul, how you doing? Hot Spurs still suck. Sorry. That was for me, everybody. Tracking subscriptions and bills are, sorry, Tottenham Spurs, for those that don't know what I'm talking about. Let me get that out of the way. Tracking subscriptions and bills are both great additions to bank finance apps, but with both, I feel they don't have the knowledge of what subscription encompasses to be able to provide tailored advice. So, for example, Netflix is simple, but my cable subscription could actually include TV, phone, mobile, internet. So do you agree that the information is key for personalization or recommendations, and how do you tackling that? It is tough. I agree.
Yes. So we are pulling data from transactions. So things like credit card statements, and even through your MasterCard, for instance. That's not going to be enough. We need to get to really what we think of as like SKU level data. In order to be able to do that right now, we really ask the user. So the users give us some more input to be able to go a bit deeper on that, so that we have visibility. We might know based on how much you're being charged, what type of Netflix plan you have, but it's not always be the case, like they mentioned, for sort of these telecom bundles. But that's where if we're trying to negotiate it for you, then we learn a bit more about the products or services within that bundle. It's going to be work over time for us to get that level of detail. But right now, user input is the way that we get a more holistic view.
All right, I love both apps. It makes all the sense in the world to me. And like I said, back in the day when I lived in the UK, Nectar was it became muscle memory for me. And Darby, I know that's what you want, right?
Yeah.
That concept of, and you're doing it for them. That's the best part. When a consumer doesn't have to think, and that does work for both Butter and Amply. When it just does the work for me, right, and shows me the savings I can have or the straight cash I can have, that's when I think you win. So all of you startup folks that are out there, keep it simple. Make sure the use case is simple, but the user count is deep. When you tick those two boxes, you win. And in my opinion, both Butter and Amply do that. So it's rather straightforward. And believe it or not, folks, we're up against the clock. So Darby, where's the best place for folks to learn about you and Amply? And by the way, one of your folks already put the link out for Amply in the comment section. They're on it, baby. You got to love that.
They are. It's an amazing team that we have over here. But if you just go to amply.ca or search for Amply in the Canadian App Store, whether it's Google Play or iOS, you'll be able to see the application, and would love to hear anybody's feedback that downloads it today, and just feel free to reach out.
And what about you, Derek and Butter?
Same thing, justbutterit.ca on the web, and we also have iOS and Android apps out in Canada. In the US, butterit.com.
So easy, folks. So Sanina, there you go. When you were asking how do I sign up for this, go out and take a look, everybody. That's it for today. Tomorrow, I'm joined by Joe Brady. Joe is a really good friend of mine from Chicago. He's the CEO of Americas. It's an Instant Group. We're going to dive deep into what COVID is doing to the commercial real estate space. We used to argue about the future of banks and branches. Screw that. What about every other building that they own? What's going to happen? Again, if you know someone who'd be perfect to come on this show, don't hesitate to reach out to me, Sam Mall on Twitter, or sam@11fs.com, or breakfastshow@11fs.com. We'll see you all tomorrow.
Bye.